What's good, everyone, and welcome back to Humble Hogs Trading. So today is going to be a quick video, but we're going to get right into it, and this is how to learn your exponential moving averages, how to use these bad boys. They are very useful with your daily trading. So what I need you to do right now is head over to tradingview.com if you're not there yet, and if you're new and haven't signed up to TradingView, go ahead, click the link in the description below. That will take you right to TradingView to where you can get signed up absolutely free and start charting and trading today. So now that everybody is all signed up, set up, ready to go, we should be on the home page now. So if you're new and you're wanting to make adjustments to your screen, if you do not like the brightness of your theme here, you can go ahead to the icon right there at the top right, and you can click over to dark theme if you prefer the dark theme. And now we're all set, ready to go to figure out which chart that we want to trade. And we do that right up here in this search bar. So the EMAs are useful on every platform. Doesn't matter if you're trading stocks, options, futures, forex, cryptos. It does not matter. It is used in every single market. Myself, I trade stock options and I trade strictly only SPY. I've been trading for 4 years now, and I've narrowed it down for the past 2 years of just trading one stock and one stock only, focused to get real good before opening up multiple different charts for different options. And I just found that SPY is a great place to start when you're brand new, and also it's got a lot of volume and momentum throughout the day to where you can make a nice good profit while trading in SPY, so you don't have to worry about going into other multiple charts and getting analysis paralysis trying to capture which one's the best one to get on through the day. So that's where you will also be able to trade with me live in my Discord. You can trade with me live every single day of the weekdays, and we will be trading SPY. So we'll go ahead and get that chart set up there. Now, this is what we have for our SPY chart, and we want to get these EMAs set up for you. So whenever you do set up the EMAs first time, you need to go right here to the top of this icon. Go ahead, give that a click, and then you're going to want to type in 5 spacebar EMA. So it's very important to put the spacebar in there, because if you do not, then it's going to pull up all these unnecessary EMAs. We're looking for a particular EMA, and that is this one right here, the 5 EMAs plus crossing alerts. So we go ahead, we select that one there by Chris K, and this is what's going to pop up on the chart. And this is overwhelming and can cause a lot of analysis paralysis, so we need to make some adjustments here. And that's where you go to your settings, and we're going to get rid of the 3 EMA, the 4 EMA, the 5 EMA, the long and the short triangles as well too, to where you're just left with the 1 EMA and the 2 EMA. And that's, excuse me, I already have this set up, so don't trash it, just go ahead and keep that right there. But I have this set up to where we're only using the 9 and the 20 EMA for our main primary chart. So I do have a secondary chart where I do use the 200, but that is for other parts of the strategies. It is a good one for getting on an entry, but it is very useful for knowing when to get out of the market, as well as knowing your overall bias too. But I keep that on another page so I can just focus on my primary of knowing where the entries are with my price action and my top down analysis that I've done in the morning. So we want to have this set to 9, we want this to 20, and we want to go right to the EMA. Make sure on the style, click white, and have that thickness as a secondary thickness. So as the EMA right there, you want to click that to blue, secondary thickness right there. And now our chart is all set, ready to go. So now how do we use this? Well, let's go ahead and get our daily bias going. So to understand exactly what we are doing here, the exponential moving average, what it does is it calculates the average price of an asset over a specific period of time. So we've chosen the 9 and the 20, and exactly what that means is 9 candles back and 20 candles back is what's being monitored on the EMA. So if you're on the daily, then it's looking back 9 days, 20 days, the hour, 9 hours, 20 hours, 1 minute, 9 minute, 20 minutes. So you get the gist of it right there. So what we're doing is going to go ahead, since this is going to be for day trading and scalping. That's exactly what I do. So we don't need to necessarily go past the 1 hour. The 1 hour shows us more than enough. But as you see up here at the top, and if you want to change your time frames, you can favorite them right there to where you can have easier access to them, like so. So you do see I do use them, but I just don't use them that much anymore because this strategy's been tightened up pretty well of just going the 1 hour, the 15-minute, 5-minute, and 1 minute. And so now we're on the 1 hour and we want to figure out what is our bias for the day. And that's where we can see what trend that we are in. So yesterday or last week on Friday, we had it's still in an upward trend, very tight. The day before that was a downward trend, as you see, and the 9 EMA crossed over to go back into a bullish momentum. So this was not a bearish momentum overall. What this was is a pullback on the 1 hour. So that's why we want to see exactly what type of action is going on. We have a nice good pullback that's occurred on the 1 hour, and now we have a crossing that's occurred, and this is a little hectic and tight, and that's why you want to definitely understand how price action and top-down analysis works so you can navigate through these types of situations without relying on your 1 hour EMA, and then even throughout the day relying on any time frame EMA. This is real good for knowing to get an extra confirmation, but it's not what you use for an overall of knowing when to get in the market or even understanding what type of condition the market is in, whether if it's bullish or bearish. This is for an additional confirmation. Price action is everything. Top-down analysis with price action is the best combo for understanding exactly how the market is going to operate. And I do have a video on that that will pop on after this training here. So if you're wanting additional information of knowing how this all works together with top-down analysis and price action, I have a full in-depth video on that that will pop up at the end of this here. But let's go ahead and see what are we actually reading on this here. And what we're actually seeing is that as we're moving along here, price is respecting the 9 EMA, and we have this nice little pullback here. And what's it doing? It's respecting our 20 EMA, which is real nice. Excuse me there. That is real nice for whenever we see this, we have a nice good spring back, possibly just like when you're hitting pinball there. It's hitting that all the way back to send that price right on up. So that's what we want to look at right there, and we can now go ahead and move down to the 5-minute to be ready to see what the market does for the morning. So that's where we have our opening right here. We see that it has crossed over and our 9 EMA is on top, and we're still showing that we are bullish. Now, with this works in all kinds of different strategies. So using the EMA, you can do this with the 5-minute opening range breakout, the 15-minute orb, the trend lines, whatever that you prefer for your strategy. This is just an additional confirmation to help you with knowing which direction to go and when to actually take action. So if you do the opening range breakout though, this is where it can cost you a little bit. It's where you can actually not maximize your profits, because if you wait for it to actually break the opening range, lock in, you have this set down here to this previous candle because it's pretty tight right there, and we're looking at a risk reward of very tight, to where if that did a reversal, you would lose everything right there immediately, only for a 1. So when you have your risk reward ratio looking very upside down here, we know that something's wrong, and that's where we can tighten everything up, and that is knowing that we can move down to the 1 minute. And when we go down to the 1 minute, now we can see what we're missing entirely. So we now know the 5-minute opening range, you go down to the 1 minute, and we can do a couple things here. We can play it safe, and that's where we can go ahead and we can take this down here. And I have in that video of knowing why would this even be a target area, because of course we're looking at it after it's already happened. So you're like, okay, well, that's all nice and everything, but how would you know that? That's in the other video that will show you exactly how these zones are lined out. I deleted everything after I was done trading for the day because I did not want to overwhelm you with the pre-market highs and lows, yesterday's highs and lows, what is actually the overall high, where we have a major pullback on the hour to set our zones, knowing our ATR. There's a lot that does go into trading. I just did not want to overwhelm you, to where we can simplify everything and focus on how to operate with the EMA. So that's where this actually would have been a place of interest, as well as this would be our stop loss right here. So a 4.7. So this is where we had the major move that continued up. So we can go ahead and tighten in right there, and we have a 2 risk reward ratio. So that means for whatever $100 you put in, you're getting $200 out in return. But now I can show you an additional move that would actually bring in a little bit more, and that's bringing that stop loss down here. Because what happened, we had our continuation up with the 5 minutes, we had our zone made, but let's not even worry about that zone. What happened, we had a pullback happen, and we have 2 candles that established our pullback before we started a continuation. But we don't want to enter here, we don't want to enter here. This pullback right here did not go all the way down. So what's that tell us right there? That even though that we have a red candle that's pulling back, it doesn't have enough to actually make any big moves. So we'd want to wait for another candle to go green, which is this one right here. Now we can go ahead and move that to enter in right here with our stop loss right here, where the continuation happened after the pullback. And what are we looking on our risk reward ratio? 3.5. So right there, we could capitalize with a bigger entry or a bigger profit with a tighter stop loss right there. And for that $100 that we put in there, we're risking only $38 of it to get $350 out of that contract. And that is why it's good to know how price action works with top-down analysis, so you can be confident to get in these, because playing it safe is just fine, but to get in on these positions right here is to understand your top-down analysis and price action. So definitely watch that video once when you're done experimenting around with your exponential moving averages after this here. So I'm hoping that you're getting a lot out of this. If you are, go ahead, give a like and subscribe. If you're wanting to catch a lot more of updates and videos that I put out as well too, go ahead and click the link in the description below if you're wanting to get signed up to the boot camp. So I do live trading every day of the week. As well, that we have in there is a couple PDFs on understanding how the overall market works when doing stock option trading, as well as my full trading strategy that's in not only video format but PDF format. But I also do have checklists that are in there. I have journals that are in there, everything that you need to know how you've ran for the day, what you profited, what you lost, what you could have done better. It's all right there in the boot camp series within that link right there. So if you're interested in that, go ahead, give a click on that if you're liking what you're seeing so far. Give a comment as well too of what you like most out of here and what you would probably like to see in the future. So what we'll go ahead and do and move on though, just real quick, we've seen that we've had our stop losses. We know where entries are at. Now, this is what we want to avoid. What are we in as far as the overall daily? We are in a bullish position. So what we would want to do is avoid being greedy piggies and going for a sell when it's in a bullish position. We want to wait for our actions to match up with everything so that we can go ahead and get in position. And that's where price action comes into play again too, because once when the market gets going, yes, you can still use these EMAs for confirmation and entry. Excuse me there. Just as such, we can go ahead and put our stop loss right here, and we can take that to the upside, which would have been right there for 1.72, which is still good money. Every $100 we're putting in, we're making 172. But what is even better though is understanding your price action, and that's where we know that it came down, it respected the 5, and we have a continuation right here, and that's where we could actually enter in right here, and that would have been a 2.58 risk reward risk to reward ratio $252 for a $100 contract. So that's why it's important to watch that video and learn how to implement price action properly with your top down analysis so that you can use all these tools correctly. And for right now though, so I don't get too far ahead of myself here, we're just focusing on how to actually use this for entries. And even playing it safe with this is still good money. So we don't have to worry about us losing any money. We're just not making as much if we have an understanding of that price action, but we're still getting 1.5 risk reward ratios right there. That's 3 contracts right there that we could have implemented in there, and we could have walked away with a nice good profit for the day. And two contracts, 3 max is all that you want to do throughout the day. You don't want to go and press your luck and keep on with trading and end up with your good day turning into a bad day. But right there, that is the overall how to use the exponential moving averages with the 9 and the 20. So I hope that you got a lot of information out of this. If you did, like I mentioned, give a like, give a subscribe, as well as give a comment of what you learned the best out of this, what you've learned the most out of it, what you didn't like about this video, and what you would want to see in the future. Just drop that comment down there, and I will see y'all in the next video. Y'all have a blessed day and stay humble.